Hey everyone. Today I want to show you a monthly option trading method that I have researched and developed. I did this research specifically on Apple stock as an example, but basically the strategy entails buying an option on the last day of the month, and in this case we enter a long call option and we select the 45 DTE. If there isn't a DTE at 45, then you just select the next DT. So let's say you can't find 45, but there's 50 days till expiration. You select that one, and you would select around the 45 delta, right? If or select the strike that's closest to the 45. So if it's like a 50 delta, 49 delta, or like a 43 delta, that's what you want to pick, right? The closest one. Then the next part of the strategy is holding through the entire month, and you sell for a gain or loss on the last day of the next month, and then you repeat. So it is a systematic trade. Um, Basically, there's no thinking to the trade other than backtesting the specific equity you want to use for the strategy. So like just imagine like right, this is Apple on a monthly chart. Like imagine you entered at the beginning of this month for January, right? Right, so you would have entered on December 31st, whichever the last day of December is for 2022, which would be the 31st, I'm pretty sure. And you would hold through the entire month of January. You would have gained 11% on the underlying, which would equate to um, a good return on your long call option. So I done a little bit of further analysis on this strategy, and I started the account with a theoretical $10,000, and basically this is just real backtesting with historical data. So I would enter a call on the last day of the month and hold. So you could see some trades, right? So for this example, I started this strategy back for December 31st, 2013. So this is roughly a 10-year backtest that I did. You can see I bought this option for 17.75 and I sold it for 33 cents. So I took a loss on this option. But you can see for the next one, I bought it for 13.35 and sold it for 23, right? And you just keep going. Um, and this, I just filtered out the blanks here. I know this spreadsheet looks a little crazy, but I'll explain it. So basically, you have the sell price for each sale. So basically, this is just showing all the ending balances for each month. So you can see for 2014, right, the year of 2014, we gained on our $10,000 account 209%, right? So we went from 10,000 to 30, almost just under 31,000. Now this isn't accounting for capital gains tax. You would be paying short-term capital gains on all these trades. Um, so really, like the gain on this account would be, let's just ballpark 40% tax on $20,000 in profits. You're looking at around $12,000 in actual net gains. So this account value would be probably $22,000 at the end of the year. Um, but then the next year, 2015 was a rough year. Not a lot of volatility, so the account went down 68%. Now this is risking 25% of the total account in each trade, right? So I could change this risk number to like 10%, right? Let's say like I started with like a $25,000 account and I wanted to risk 10%, so 2,500 bucks on the first trade, right? Um, and yeah, like that would be, your equity curve, which is this. Your equity curve wouldn't be as aggressive, but your risk will be lower. So this number right here is your max drawdown that I calculated. Um, it's just taking the minimum max drawdown. So the most you will ever in the past 10 years, the most you can lose on the total account value is 52%. That's the max drawdown. Um, but like if you wanted to risk more, you could go to like 25% risk per trade on the account, which is a lot. Like that's a lot. But like let's say you're only willing to risk like $5,000, you know, like in comparing it to your overall net worth, like depending on where you are, you can make the numbers work. Um, but like if I were to risk like 1% of my account, you could see that these are all blank because the option price isn't high enough, um, or it's the option price is too expensive to even enter the trade. Um, but like you could see the equity curve here, right? Like we went from 25,000, we started at 25, and I can update this too. Let's change this to like I don't know, like 10,000. Okay, you could see here we started at 25, and we did start losing, right? We were at 16,000, but pretty much from February 2016 we went up aggressively and up to $32 million as of uh, December 31st, 2021. Um, but yeah, like you could just keep scrolling down. I just use 10,000 as my example. Now I have to fix this. Hold on. Let's change this to like 5,000. Make sure that looks good. Okay, cool. Um, so you can see like we went down 68%. So this strategy is very aggressive. It is a risky strategy, but if you wanted to put like a small amount of capital at risk to make large returns over the next like 10 years, this is a strategy that I found that's pretty good so far. And the great thing about this strategy is if you follow the rules, you know, you're just entering a trade on the last day of the month and holding it for 30 days and then repeating. So it's basically a set and forget trade. You really don't have to worry about stop losses. You don't have to worry about like any profit targets. You can optimize this to like say, hey, I want to take profits at 100% gain, right? Um, but then you're not gonna. But if you do that, you're gonna miss out on the big gainers, right? Those 300, 400, 500% gainers in a month. So you just keep going down. Like we gained 35%, and then like you could see like some years 500%, 17%. 2019 was a great year, almost 1100% gain. 2020, of course, 643%. And this is gain on the overall account, right? So I'm taking the ending balance. So in this case, 8 million, 8.2 million ending balance minus the beginning balance, which was 1.1 million, divided by the beginning balance. And that gives you a return of 643%. And you can see here, like 2022, right? 2022 was a rough year for the stock market overall, and we went down 74%. And then so far this year, we're up 121%, right? So, and then on the right here, this is just our drawdown, right? So basically, right now, as of 8/31, the account, the theoretical account, is still in a drawdown period of it's still in a drawdown of 42%. And I think its previous high was 13 million. So yeah, and we're almost there. Like we're about to pass that and continue going up. If you want to look at the equity curve here, this is what it looks like. Um, Pretty neat, but it's volatile, right? So this strategy to actually make it work. It's more of a psychological thing where um, you got to be okay with like losing money. And the whole point of this strategy is you're risking a lot per trade, but you're kind of just letting you're see like I base this strategy off of the random walk theory. So basically this strategy just says, hey, I think that the stock market's going to go up this month because the stock market tends to go up over time. But I don't know what the stock market's going to do. No one can predict what a stock is going to do the next month, next year. It's a stock price is random, but we do know that stocks tend to go up over time. So basically, this is a long only strategy. If you wanted to, you can incorporate a moving average um, with like a short signal type of thing where like if the price goes under this moving average, then I'm gonna go short, or if the price goes under this moving average, I'm not gonna put on a trade. Um, but this strategy, this setup that I did, the method that I used, it the trade is long regardless of what the market's doing. So this is like basically a 9-year back test, 9 to 10 year back test, which is pretty decent. And you can see like recently it's been chopping around here, but this is like large swings in capital, right? So if I went to the bottom here, this is 4.1 million up to 13 million, right? So large swings in capital. And again, like these are all virtual trades that I took with a backtesting software, and so the data is relatively accurate. Um, and this accounts for implied volatility and theta decay, right? So these trades that I backtested with are fairly accurate. I'd say about 90 to 95% accurate. Um, so yeah, that's pretty much it. So like look at the monthly candles. You can try doing this with other symbols too, like TQQQ or like NVDA, right? Um, and maybe I'll create something like a plug and play thing where um, you can do your own back testing. Unfortunately, like the back testing I do is more manual, which I think is better in some cases because it's more accurate. Um, but yeah, that's pretty much it. So basically, yeah, like take a look at like a monthly chart, like look at the bigger picture, because there's opportunity in the higher time frames where you can just put on a trade, set it and forget it, and be able to do your own work, right? Because the great thing about this trade is you put it on and you can just go and run a business or work your job, go to school, whatever you have to do. So yeah, that's pretty much it, guys. Thanks for watching, and talk to you soon. Bye.